Good morning, everyone, and welcome to the European crossover webinar. And let's take a look at least as far as where we are with data right now. We did get the German CPI, which came out earlier. And actually, that's the only data that we have until we come into the States and we do get CPI and wholesale inventories. So it'll be wholesale inventories at 10 a.m. Eastern, and CPI will be a decent sized report here. And yesterday we saw the dollar really take a good whacking. Yesterday, you can see here we're still pressing even lower here, and then equities came back a little bit, but I don't know if you saw is we pushed higher when the Bank of Japan came in and were saying, well, they're going to keep going with their ETFs, and that immediately caused a big jump in S&Ps and also in Nasdaq, and so we saw that pretty big clip on that. We can take a look. Bitcoin's still holding up closer to its highs also. So we'll go and take a look where we stand there. Bear with me. And here we are on the 30-minute. Look, we've gone and pushed up higher in here, and really a better look is going to be on here on the 2-hour chart. But you can see here where we've had a huge run up in here. Bear with me. Actually, probably easier to see it this way. Now, yesterday we came up to the 161%, and we did fade. And although we still defended this area on the close, and the market was still acting relatively tight, but when that came out, news came out, it ended up pushing us higher. We did come up here with this solid bar. Then we had something similar to almost like a gravestone doji. Same thing here, almost like a gravestone doji. Then this little jump up in here. So right now, the key level for them to defend be that close right there, which would be right there, which would come in at 13,733. That's where they need to defend, and what they may try and maybe push back. We'll see. We're going to see how much further. The market was pretty stretched, and it looked like it was, kind of losing some of its juice yesterday afternoon. And even when we closed yesterday, we were right in here. And then the Bank of Japan came out with they're going to keep the ETFs going. They said that they needed to keep inflation going. I don't know whether that might be the last extra push. I'm not saying that this is it, but I'm saying that gave us that extra. Now, it didn't, and back in, I don't want to say the old days, but back a few years ago when they were doing the ETFs, it would really launch them. And when you look at it from a percentage move, we did move to new highs, but it's not like we ripped up. Like if the Bank of Japan would come with the ETF news, would really send the markets flying. It did move higher, but once again, we've pushed here, but we're not launching. Like if with that news, we probably should already be in the 13,800s to give us, a little bit more perspective. Because when that ETF news would come, we'd go in and rip them good. And now when you look where the Nasdaq is, yes, they've moved higher, but it's not like you think about it. They're saying we're going to keep on going with ETFs. So you would think, wow, they're going to launch. So we'd probably be, put things in context. We might be like, let's say, right about 13,850, 875, maybe 13,900 to push to another leg higher. And what we did was we were here just below, like we were trading here at 690. And we launched up to 720, and we just kind of hung up there around 7:30. We jumped up, we came back. So that'll be important. This maybe that, like I said yesterday afternoon, it kind of started acting like it was kind of like starting to lose some of its juice. Uh, Yesterday afternoon, we the previous few days when the market would be stuck, we'd see it. I wouldn't say necessarily ramp into the close, but we'd see some decent short coverage. And yesterday, it kind of just hung around. It actually went up higher in the close, and then it quickly fizzled back for I think about 30 handles, and then it kind of steadied itself. And then we're kind of hanging right in here in Asia. And then that news about the Bank of Japan keeping their ETF program sent this thing moving higher. And even then, when we moved higher, I think about 25 handles at 30. That isn't much for a percentage point. You would expect, okay, they're already doing it, but maybe we'd have pushed up like a quick 100 handles. So, and then right now, be it, like I said, about maybe 13,850, 875. And so we pushed high, but once again, like I said, if you look at it from in context, it may not have been as much. And I just kind of wondering about that since the market was kind of getting a little bit tired. Um, then also take a look here. Bitcoin. Bitcoin is still holding up in here very, very well. So we're going to take a look where we stand here with the well, we're going to wait till the analysis to get into where the FX was at, but it was key. We were talking about the euro yesterday, that we would see some, if we got a daily close above that, let me go back here, the 2073, that would cause some short covering at that point. Well, actually, it would offset those shorts that are in place. But if we ended up closing on the euro at 21.6, that would launch us up to the net, to move up to a higher level. And we did close just above 1321.06. Bear with me. Yeah, 20, I apologize, 21.06, because I don't see any new levels. And we did close just above that. And now we're with the euro 21.30 with a high of 21.44. So it did take us that new leg, and we'll take a look at that. But we'll cover the news. Let's go on, and actually we'll move there and just take a quick look at that. And Richard says, good morning. Good morning, Richard. Let's go on and move into there. And let's take a look at the euro. So this was huge right here with the euro. And we'll open it up, but you can see here, we'd actually got this full-on sell signal. We'd broken lower. Even the moving average had crossed lower. The momentum was pushing lower and opened the door for us to go higher, to make a move lower. And move lower we did. It just happened to be when we did our analysis, you remember, on Friday. This happened to just on Thursday, happened to coincide with the 50% back. Open the door for us to move higher. And we're looking, and I remember the time we put the bias chart resistance, I think the following day at the 2073, that seemed like a little bit of a move higher here. Wasn't even sure we could get there. And I put on the analysis, we could get a stretch up to 2089. I think it should have been 2091, but anyway. And so I'm thinking, oh, it wouldn't get there. Well, when the dollar started to fall apart, which I think was primarily in part to Bitcoin, which put that pressure. We talked about that yesterday. I said, look, if we get a close above 2073, that's going to negate these shorts. But if we get above 2106, that opens up for another push higher. It's not like as if, oh, we got up here and now we just kind of failed and fell back. And you can see that we've pushed up even higher here. So we'll take a look at the news. So the Aussie and New Zealand dollars hold gains as local data run hot. Well, it's the same old story. We talk about this. One day it's, oh, they're weaker because the new variant. The next day, oh, they're stronger because they're in control of everything. So it's just like the same. It's just basically the same news, different day. Australian New Zealand dollars consolidated recent gains on Wednesday as a run of upbeat data keeps bond yields elevated. At home, the Australian Consumer Survey saw a bounce in February after a setback in January. Bank debt and card spending suggests consumers had been busy shopping in January. It is fair to say that the results further our view that the Australian economy starts 2021 in an enviably strong position, particularly given global events, and NAB chief Alan Holster said. Or Oster said. Now, you remember 2 days ago they were saying, well, you see, the Australian dollar is just not as strong because they've got that new variant. It's the Kiwi that's been New Zealand's been strong. Now today it's like, oh, they're doing great. Well, that's not what you said 2 days ago. 2 days ago you said, oh, well, they're having a little bit of trouble with the new variant. So that's what I'm saying. I've got a problem with the news. Honestly, if it wasn't for the economic data, I would probably just get rid of Reuters. I mean, it's not their fault, but I'm saying is this news just doesn't offer very much when you see something like that. The market's higher today because things look good. The market's lower today yesterday because things look bad. It just doesn't provide much. Usually I'll use the news to kind of set the tone for the day. I just don't see much use out of what we see here. Let me get rid of this one. Let's go and move into, let's see here. The dollar wallows at 2 weeks lows and Bitcoin steadies after a surge past 48,000. There we go. The dollar hit 2 week lows on Wednesday as demand for safer assets ebbed on Wednesday, with traders looking ahead at an expected recovery from the COVID buying. Bitcoin consolidated above 46,000, reached a new high of 48,216 overnight, following Tesla's disclosure of 1.5 billion in trading. Real virtual currency Ethereum, which often moves in tandem with Bitcoin, reached a record 1826. The economic outlook for the year, according to market consensus, appears to be buoyant. Sentiment and positioning are key drivers for the market right now, and traditionally viewed as a safe haven. The dollar has sunk against major peers at optimism of a monetary and fiscal support, robust corporate earnings, and coronavirus vaccines bolstered risk sentiment. The dollar drifted as low as 90.37. It's even lower right now. And on the other hand, it's expected to speed a U.S. Recovery relative to other countries, bolstering the currency. But on the other, it's a major driver in global reflation narrative that should lift riskier assets. After a strong start to the year, the greenback, the latter view appears to be regaining away week with last week's U.S. jobs data providing the turning point, according to a Westpac analysis. Friday's disappointing payrolls completely flattened the dollar and casting doubt on budding U.S. outperformance narrative and focus. So things are going great, and that's why we're moving higher. The greenback is doing weaker because things aren't going great. That's what I'm talking about the news. That's a good point. You see, things are going great. There's less risk for safer assets because we're getting a hold and we're seeing more stronger potential for coming out of the coronavirus lockdown, whatever. Oh, wait a minute, the dollar's doing bad because we're not doing so good, and the jobs data. So that's what I'm saying is these news stories lately just drive me bananas. Hang on, let me close it out. It's why I only read like little snippets out of these paragraphs and you see me jump around, because it just seems like senseless to read stuff that doesn't really offer any kind of a merit. Let's go and move into the analysis, though. Okay, and as I talked about the euro yesterday, remember we were referencing, we got this close of 2072. This was key. This big old level, we should actually highlight that. That was really a key level. And that really opened the door for them to move lower. And the fact that we came back so quickly, this was, this was actually a bullish engulfing cloud right here. Now, that could have probably allowed us to maybe dither around this level here, maybe for a couple of days. But as I told you before, to me, it was Bitcoin that really kicked the dollar in the teeth. It really sent this dollar lower. And we talked about that yesterday. I'm not going to expand on it any further because if you didn't catch it, you can watch yesterday's thing. But I gave thoughts as to why. And it's not that I've been a big Bitcoin bull or anything because I haven't at all. But I've referenced as far as this, finding acceptance with not only the fund community but with major trading banks, and now with the concern that some S&P companies could actually park some of their funds in Bitcoin is really just going to giving it some juice. But anyway, let's go and move into the analysis here on the euro. So that really kicked things around on the dollar and sent the euro flying, and that was my concern. And the only hope that the dollar bulls had at that point was if we would see this equity sell off, and we kind of saw it pull back. But then, as the day went on, it wasn't pulling back, and then there was no chance they were going to have to cover the shorts as we saw it close. It was going to be above 2073. The difference was could we get it close above 2106? We did, and that opened it up for us to go higher. Bear with me. So the euro closed above 2106, opening for a new leg up. Resistance for Wednesday will be 2159. You can see the 2159 with support at 2065, which is just below this 2073. Comes in at a level right there. There's where we come up with the 2065. But as I said, if you just go with the technicals, you can see that was really devastating for them to lose this, and people were forced to have to cover as we got the close above 2073. Now it could have been up in here, like let's say right there, 2095, and then maybe the market dawdles. But closing above 2106, that opened the door for a higher leg, and sure enough, we saw it make this run today with a high of 2145. So once again, it's going to be 2065 and 2159. And now it's just going with the technicals that it threw us like that. Let's go into the cable. Wow. See, cable is already strong, but this is all has to do with Bitcoin. And that was one of the concerns that I had also about equities, as I said, was that, and we're kind of fading a little bit from the equities, like the high in NASDAQ looks like it'd be like 13, maybe 760. Right now we're trading at 747. Not a whole lot lower, but that's why I think that this Bitcoin is something that's going to make things a little bit worried here. But, and why it kicked the dollar in the teeth. Got to be careful. Somebody might get upset because kicking the teeth might be considered not proper. But anyway, that being said, we did get this. Let's go to the weekly level here. You can see here this 37.98, and that was our take for almost a couple of weeks, saying, hey, because remember we got up to this 37.44 and the market was really struggling. I said, well, it looks like it really wants to eventually hit this weekly wick that we had here. And well, guess what? We closed up there, and now we're even extending it. And let's go to the daily right here. You see that? And now we're even pushing it even higher. So take a look at the analysis here. So the cable closed above 38 as the dollar broke lower. Weekly wick is at 37.98. Resistance for Wednesday will be 38.36 with support at 37.35. God, this thing's still pushing higher, but it's going to be 38.36 for resistance and support at 37.35. Next is going to be the Aussie dollar. The Aussie extended its gains on Tuesday. Resistance will remain 77.79 with support at 76.60. So the only difference is, and actually I don't know why I had 77.63, but it's going to be 77.79. Thought I had that before. Although, oh yeah, I remember yesterday when I was doing the updates, none of this stuff was sticking. I remember that. And support does move just a couple of pips higher to 76.60. Moving into the Kiwi. The Kiwi closed just above resistance 72.34. Resistance for Wednesday and the rest of the week will be 72.95 with support of 71.74. That dips just a bit lower. Now, like I said, we got to the 72.34, and that was right there. Right there. And actually, I don't know why I put 34 because it's actually 38. But anyway, but because we closed right here, right there on the dot, really you have the next level. If we were to get now, we may just end up kind of getting stuck in the rut and sliding back. But with that close, it really opens the door that potentially we can come up to 72.95. So it's still holding in that area, which I don't know why I came up with 34 because this level is actually, you can see it right there. The body close is actually 72.39, and that's where it's close. So I don't know why I had 34 yesterday because it's actually that body closes 30 right there, 38.39. It closed right there. We haven't taken it up, so we haven't taken it out, but the door would be open if they get one more extension. I'm not so sure they're going to. We've had such a run on here. Would be 72.95. Hesitant to because we didn't close beyond that. I'll tell you what, we'll just stick with that since it closed right on the notch. Because I was saying, okay, if it was 34, we did close a couple of pips above it. But this is actually 72.39, so we'll go with 72.39. Keep it in check. I just don't know how much further. Like I said, you keep seeing this news, silly news out of Reuters. It's good. It's good. We've had such a good run. You see, like I'll give you, as I mentioned before, here's the difference. Like, we closed right on the notch, but we didn't close above it. And here was the difference here in the euro. As I said, hey, look, if we close above, doggone it. If we close above 2073, we're going to get, if we're open as we go into the close, which is yesterday, if we're going to be above 2073, this is going to cause a short covering. But if we get above 2106 and we close just a hair above it, that's going to extend as well. The key was you're thinking, well, look how far it's come from Friday. Are you kidding me? And maybe we're just going to just get stymied right here and hold. But you see, just by closing above that, that opened this door for us to go to a new leg. Didn't have to go that high because remember, the next start we had today was 21.59. Did the analysis in Asia, but we did extend. So you can see the difference when you close above those key body closes. Hence, what I was referring here in the Kiwi, which is it did not take out the 21.39. Closed right there on the nudge. So that will keep it there at the 72. Should have been 39. Let's go move into the dollar CAD. This thing still looks sick as a dog, just not good at all. So let's go and take a look at the analysis here. The dollar CAD closed at near 3-week lows. A daily close below 26.87 will open the door to take stops below 26. Support on Wednesday will be 26.55 with resistance at 27.44. So you can see here all these touches here. We close almost there, but if we get a daily close below 26.87, just the same way we were talking about the euro, it's going to extend this, and then we'll find ourselves on Friday potentially pressing back to this 26 even right there to maybe press some stops. We'll see what happens, because then what would happen is anyone who was long, they'd end up pressing them going into the close on Friday. So support's going to be 26.55. And resistance 27.44. Onto the dollar peso. Well, we're just stuck in the rut. We're not going anywhere. There's no changes in the peso. I was surprised we never did make it down to 1996, which we haven't, but that's key, 1996. And on the upside, we had 2019. And we've just been stuck pretty quiet. Actually, in this day, we went up to 2023. That's that old key level. But it's been like this, and it's going to be since Monday, which is 2019 and 1996. So no changes. Moving on to the dollar yen. This thing broke even further, and the dollar yen broke lower on Tuesday. Support on Wednesday will be 433 with resistance at 496. And the low today is 439. So we've got 433 for our support. And resistance 496. It's still bullish, although you have to question it, because if we get the daily close above here, below here, this 452, then it's no longer bullish. You have to kind of question it. It's actually kind of neutral now at this point, but I guess we could update it to range. Next is the cash dollar index, I should say. You know, that's why you have to just go with the technicals. You know, somebody, what was it, a week and a half ago was talking about, we're going to see this big major dollar rally. There was never a dollar rally. I mean, no big major. It was gonna rally, and it was gonna be this major squeeze. We never got it. Obviously, like I said, Bitcoin really hurt it, but anyway, nonetheless, dollar index has fallen apart. Support for the balance of the week is going to be 89.90 with resistance at 91.06. Yeah, I mean, when I looked at this, I said, well, you can see where this look. That isn't going to make anything. Anybody, if anyone's stuck in there, they could end up being pressured, and the real support is going to come in here at 89.90 at that point. And that's what I'm saying, the balance of the week. Yeah, maybe for today, you could say, oh, there's a little bit of support here at 90 right there, 18. Or only thing that's going to matter as we move in towards the end of the week going forward is going to be 89.90 and support a resistance if we rallied it up. And not that I expect to rally yet, but I'm saying we could rally all the way up to 91.06. It would still be bearish. We'd have to get above that. So on the downside, 89.90, upside 91.06. To the cross rates. We haven't seen a change here. We still had 76.31. Does look like it's kind of fade from that. Just one day, you could, if you were short-term trading, or if you were, let's say you were saying, I think this is a short, then you wouldn't want a daily close right there, as long as it didn't close above 75.93. Okay. The only thing is, what we'll do, we will lower it and we'll move it to the high of this of this wick here, and we'll put it right there, 76.11. So we'll lower it to 76.11. But if someone was hell bent and said, you know what, I don't care, I want to short it, then okay, you could short it. You just wouldn't want a daily close above. If you got a daily close above 76.93, 75.93, you'd need to go in and cover that. And the downside, we have 75.29. And for now, we'll stay with that 75.29. Look at the euro pound. The downside is at 87.34. No changes there. And the upside, we did have 88.28. Well, you could actually look right here if you're trying to keep it pretty close. But right now, it's going to be right there. That body close as of now, which is 88.18. So that'll lower it by 10 pips. And next would be the euro odd. Still remaining weak. No changes here in the euro odd. Downside 56.59. Well, pretty close to it right now. We're actually right there. And actually, we got as low as 56.35. And this market's struggling. So right now it's going to be this wick coming across here. That's going to be key for this market to hold, which is 56.21. And bear with me. There. And then actually, you see the bodies. It actually did hold it. I should have updated that. It's 56.21. If it breaks there, then and closes below there, then this market's in sad shape. On the upside, immediately it's right here at 56.96, but you could easily goose some stops there. So let's take a look at a 2-hour chart. So if we break higher, it would be right there, 57.11. And on to the Euro Kiwi. And we had 66.67 as the low here. There's no need to change that. And on the upside, we had 68 even, and that'll still hold. So that's going to remain the same, 66, 67, and 68. No changes there. On to the Aussie. This is still holding up real well, but no changes here. The upside we had was 81.28. We came up to 81.16. And the downside, 80.01. No changes. 80.01 seems like a pretty big drift down here. Let's see. If we wanted to tighten it up, it would be right here at 80.35. 80.35. We'll tighten that up a little bit. Next is going to be the guppy. And we had 45.19. Boy, what a run this thing has had. We're going to keep it at 45.19. And see, look like I'm supposed to get an update on the whatchamacallit, Excel on this bias chart. But anyway, 45.19 with the low that we had was 43.62. Boy, that seems, well, no, it's not too awfully low in case we do run. You could have made the case right here, which it held, but that was such a tight move. But cable still remains well bid. We'll just go with this lower wick, which can be 43.73, which is just a little bit higher than 43.62. And lastly, the sterling odd. We had the upside of 78.70 with the downside of 78.25. It's held the 78.25. we go. And on the upside, it's going to be right there where we're at right now. But it just seems like we may be able to push a little bit higher. But the next real test is right here, 79.81. We'll just go with the immediate technical, which is going to be right there, 79 even. And that'll cover that portion. Take a look here. We've talked about that. If you look here, you see how Fangman is just kind of quiet overall. Look at Apple, this on a daily. Look at Amazon on a daily. Microsoft has been pretty steady, so we got to give that one credit. For good reason, it has been moving higher. But as I mentioned before, here's NVIDIA. Did try a little bit of a breakout, kind of fading just a little bit. Netflix, not any big mover. Intel. Tesla's done well over it, but even then we're kind of stuck in the rut. But that was my point, was that overall, with some exceptions, like I said, Microsoft, Google, FANG hasn't gone anywhere. Yet NASDAQ has continued to move higher. And why, I don't place too much emphasis. I'll kind of look, and if there's a major break, but we're just kind of stuck in this area here. And even though we're stuck, the NASDAQ itself the NASDAQ NQ has moved higher, but not Fangman. So has not been a good indication of what things are going to go at all. We can take a look at the pandemic plays like Peloton, still holding up relatively well here. PayPal, we went to new highs yesterday, and then we went even higher again. From the day before we went on. This PayPal is just bananas. Now, this one is probably a better indication. And let's look at eBay. eBay pulled back a little bit, but PayPal is just really launched here. Look at that. Now, that's one to keep an eye on. Gold, not really doing a whole lot. We came off those lows, but it hasn't done anything. And then silver after that big move. And I think I don't know if this was a 50% back, or someone had asked me, we were looking at it, and we have moved higher, and we're just back here at this key level, this 27.72. We see we got above it, but really silver's lost its luster after those margins got raised, and things kind of came unglued. Moving back, Richard says, would you like you to show the bias chart? If you finish with it, I would like to take a screenshot. So there's the bias chart there, Richard. Sorry about that. And the only reason I haven't been showing it right there is because since I maximize the screen, I'm going to have to keep moving it backwards and forwards with each update. So that was why. But yeah, if you want to take a screenshot of that, sure. We'll go on and move into the sure, no promises, thanks. Let's go on and take a look at back to the NASDAQ. So this is what I was talking about. Now, technically, though, you can see here, we got this solid bar here. That opened the door for us to move higher. There was no denying that. But then we got almost like a little gravestone doji, another one, and we made this one extra ramp, which is when you come into European trading. Now, once again, if you look at the market overall on this 2-hour chart, we rally up, we fall back, and you see here we kind of finish like in the middle. We come back, and we were able to defend on Monday. We rally back up here towards the highs. You see how they would ramp them up on the close real well? We would see that the same thing here. And then we start dawdling. We went higher on yesterday, and then we fell all the way back, but we held 13,643, and we closed just above this 13,365-ish here. See that? So that's important because you can see here, that's why the body closes are so important. And that might be make it difficult for you to see, but let me, there. The body closes are so important. You see that right here? So we kind of tag there, here. And so the market closes. We actually saw a bit of a rally, and then the market dips back on the close, but we still hold above 13,365. So the market's basically dawdling around here, and then the Bank of Japan says, "Oh, we're going to keep our ETFs going because that's part of our program now. We have to stick with it in order to generate inflation." So we quickly see a fast 25 handle run up. And actually, it looks like it's more than here. And it was on a 2-hour close, but I'm saying the initial run up was only 25 handles. So you're thinking, wow, that's huge. A central bank says they're going to keep their ETF buying. Now, in the past, and I wasn't trading indices hardly at all, but in the past, that type of move was good for about 100, 150 handles. And I'm saying is when you look at where and usually portended to move for about a couple of 2.5 days at least. So from where we're at, that kind of news would have sent the NASDAQ realistically about right from the get-go about 150 handles. And maybe right now we'd be up like, as I mentioned, seriously about 200, 2.25 handles. When I say 2.25, I mean like 200.25. If you look at to where we're at right now, probably would even be more. So the fact that we only jumped 25 handles initially, and then it took us a while to punch up to here, makes you kind of wonder. So we get this solid close. So you take out this area here, right there. So that pushed us here. And then we saw the market push up a little bit higher, but we closed with it. Well, almost looks like a gravestone doji. So you're thinking, okay, maybe this can be a little bit weaker. Right, same here. But Europe opens up, so they got to get into the act. So that presses some stops, anyone that's short. But then look, we're starting to drift back a little bit. And you can see here, and that's my concern, is that this move in Bitcoin will kick the dollar in the teeth. And the fact that we're holding most of these moves in Bitcoin, we've seen rally and then we break, rally and then we break, big rally and we break again, rally, and you see them saying we keep signing back. Now this is holding, and that's something that's a little bit concerning, and why it really opened the door. Also, with the dollar falling apart, that's a little bit concerning when people start to look and say, I got to be careful. And this is what I thought that we were seeing yesterday was this market, of course, is on a very short-term time frame. Market kind of struggling right here. You see that? We're kind of struggling throughout the time here. We're starting to see the market get like, look at this NASDAQ. You see, real solid ramp ups. We dip back, you come back, pretty decent amount. You see, let's put this in context right here. You come back really solid. You take a dip. Oh, we're going to new lows. We come right back, roaring right back. We take another dip. Bam, we come roaring right back. You see what I'm saying? We extended a little bit up. Oh wow, we just made new highs. This market's really gotten a little bit overdone. Now we're gonna sell off. We dip back, we come right back solid as rock. You see that? We come back, push right back up solid as rock. That's what I was telling you here. I think maybe this might have been the Friday. We dip back. Then on Monday we come back. We pop back up, and now we're starting to struggle. You see what I'm saying? Now here was yesterday. It's like we're kind of hanging on. We're kind of struggling a little bit. We ramp up, but we quickly sell off going into the close. I mean, fast, a quick 25 handles, but we managed to close just above this 13,665. And then we kind of like diddle doddle. And then all of a sudden, Japan says, oh, we're going to keep our ETFs. So they quickly make a quick run up. But it isn't anything like, wow. I mean, something like that. That's already been news for a while. But once again, them saying that probably should have kicked us up about, realistically, should have kicked us up about 100 handles. Like we should have already immediately jumped up to about this 13,780, and then maybe we would have pushed a little bit higher, like another 40 or 50 handles, and we say, wow, it looks like another run. That's what I'm saying. It looks like the market's just getting, it's just like I wouldn't say a car running out of gas, but you start sputtering, and that's what I'm saying. We're just starting to lose some of that internal drive. So we'll see how we close, but we could easily start to slip back in here. And once again, dawdle. We'll see what happens. But right now, that's what I'm saying. You would have thought that the market with that type of news would seen an even stronger move, or not only a stronger move, but more sustained buying. We're starting to pare back. But that's all we have here. Thanks for joining us here on the European Crossover webinar, and we'll see you in the chat room.